Hi, everyone. Welcome to another episode of the LATAM Stocks Podcast. I'm your host, Patrick Flood. Today, I'm speaking with Francisco Kops. Francisco is the Chief Investment Officer at Ivest, a Brazilian multifamily office. He's previously worked as an equity analyst and portfolio manager in Brazil, so he has a ton of experience working with Brazilian markets. I have a lot of questions. We're going to talk about all kinds of topics related to Brazil and investing here, so let's get right into it. Hi, Francisco. How are you?
Hi, Patrick. Thanks for the invitation and hi, everyone. Yeah, it's
Hi.
a pleasure.
Thanks so much for doing this. I'm very excited to talk to you. So, before we start getting into market specific stuff, can you tell listeners a little more about yourself? Where are you from? What'd you study? How did you end up being a chief investment officer at a Brazilian multifamily office?
Sure. Well, thanks, Patrick. I'm born and raised in Porto Alegre, which is in the South Brazil, very nearby the border with Uruguay. I'm born and raised there, and I graduated in business, okay, with a major in finance from University of Rio Grande do Federal University of Rio Grande do Sul, which we call URGS. And after that, I spent some years in US. I lived 3 years in US. Right now, I'm living 15 years in São Paulo already. So, I mean, besides the time that living in São Paulo in US, I was living in Porto Alegre. So most of my life I spent it there.
And then how did you link up with Ivest? What led you to end up being a investment officer at a family office?
Well, it's a long story. It's a career that I did many things, but in short, try to summarize here. I have more of 18 years of experience in financial markets in general. Most of this time working with equities, okay, both in the buy side and the sell side. The last portion of my career, I was an equity portfolio manager and analyst. Okay, I worked for some important macro hedge funds here in Brazil. I worked in Santander Asset. It was my last job. Gardi Asset Management, Legacy Capital, Asset One. So for those more familiar with the Brazilian hedge fund universe, probably they know those names. In the sell side, I worked for more than 7 years. I was the head of research of Banco Safra, okay, for 2014 to 16. And for more than 7 years, I was the senior analyst covering financial institutions there on Banco Safra as well. And the beginning of my career and prior to equities, I worked with M&A, especially credit. Okay, I worked for Medley Capital, which is an American hedge fund, focused on distress and direct lending. Most of this time in US, I used to live in California. In the very beginning of my career, I was an accounting auditor for Ernst Young, okay, in Porto Alegre, specialized on banks, so on banking accounting, which for me was a very nice school because it gave me a strong background for accounting. So that's a little bit the how can I summarize my career? And then I left Santander in the end of last year, and I went through a period of gardening leave. So I was invited to join Ivest. Caio Fernandes, which is the founder, we worked together in Safra, and he invited me to be the chief investment officer to basically be responsible for the investment committee, the asset allocation decisions for clients, both the structural ones, the tactical ones. And also I'm a portfolio manager for an equity product that we develop in-house and we offer to clients. So that's a little bit how I come up with Invest.
Interesting. So, what other services does eVest provide to these families? Is it only investment services and allocation, or do you help them with other things?
Good question. The core business is the investment side for sure. So we operated in different models, right? We have the poor financial advisor model. We have the wealth manager model, but we also have not just investment. I mean, that's the core, but we have also insurance, we have banking products, and we have the financial planning. I mean, so this is we try to help the client in many ways, starting with the financial planning and checking all their necessities. So of course, we ended up with the financial advisor and the wealth management, besides the insurance and the banking part. We are developing as well, it's not ready yet, an asset management arm, okay? So, and we have an offshore. I don't know, for those not familiar, we have an offshore as well. So we basically try to offer a wider range of services for clients, I mean, in many ways. The investment is the core for sure.
So you have the offshore, so you help them with international portfolios, I imagine. It's not just the Brazilian side of the family office assets. You'll advise on U.S. equities as well, for example?
Yes.
Okay. Interesting. So tell me a bit more about the family office industry in Brazil, because Sao Paulo is definitely a hub. There's a good amount of family office here. So what does a typical Brazilian family office client look like?
That's a very complex question because there's a lot to talk about over here. I mean, we don't. Brazil is it's already sophisticated in terms of wealth management, I believe, and I think there is a lot of client types here. We don't have just one type of client, right? I mean, of course, we have the very high net worth individuals and families, okay. And each company, I mean, try to have a different tier for that. I mean, which cut is considering the high net worth individual, right? But I'll say we have definitely this group, at least in Ivest here, we consider the ones over 25 million reais, okay, under management. So there's a lot of wealth management companies and offices that are specialized on these groups and this group of clients. A lot of service, of course, those type of clients, they have a more wide service portfolio in terms of those offices. We have what we call the second group, which is in the middle through, like a client with over 1 to 2 million reais, which is kind of the Ivest core. We have clients over 100 million reais, but the core of Ivest it's around 1 to 20, okay. So maybe we can consider this is like the middle through it, and then we have the retail investors, which are the ones that really push this market through that model that is the EFAs. Maybe you guys are familiar with the term, which are the financial advisors that are linked with a bank or a brokerage house like XP, BTG, and they are linked with that, and they are not remunerated by the client itself. They are remunerated by the products that they sell. So it's a different model. We basically have three models here, right, Patrick? We have the classic US financial advisor model, what we in Brazil we call the consulting model. Okay, so the client remunerate the advisor by a fixed fee for a consulting service. We have the wealth manager, which the client pays a fixed fee and sometimes a performance fee for the manager managing the client portfolio directly. And we have this third model, which is the most familiar in Brazil, the ones that the financial advice, but they are not remunerated by the clients. They are remunerated by the products that they sell, and they are linked with those big banks and brokerage house. Okay, I'll say that those are the three big models, and this market has grown a lot. I mean, we are chatting before, right? We talk here, and I believe we are passing through what I call the wave 3 here in investments in Brazil. Like I call wave 1 was after the Plano Real, after the end of the hyperinflation in Brazil, when people were able to invest, to plan, and of course, I mean, most of those investments were done on banks, asset management, okay, and on hedge funds, asset class like equities. Then we have the second wave, which is the democratization of the investments in Brazil, especially pushed by XP and BTG and in this model, the EFAs, where the financial advisors are remunerated by selling products, and that democratized the investments in Brazil a lot, in my view. But they were so fast and with a lot of advisor, at least in my view, not prepared for work. I mean, so at least in Ivest, we are seeing a third wave, which I think is an opportunity, which is the professionalization of that. I mean, the client understands that the model, the clients understand that they need a professional financial advice to help through investments and the whole financial side of his life. And he's not afraid to pay for that. I mean, like you pay a doctor, like you pay a lawyer. So we saw that in US. I mean, the US developed that way, and we believe this should be happening in Brazil. So we see this fixed fee model, like the consulting and the wealth manager gaining space here in Brazil. And I think this is a structural move, because with these EFAs and the wealth managers in Brazil gaining a lot of space and gaining a lot of clients, I mean, they are gaining power in terms of how we structure the market. I came from the asset management industry, right? So and you are seeing a lot of asset management firms in Brazil. A lot of them, most of them, selling the same kind of products. So I'm not saying that it's a commodity right now, but it's definitely, we have a lot of similar products being sold by those firms, and they don't have a direct distribution, right? They depend of third-party distributions, which exactly it is the EFAs and the wealth managers. So as soon as the wealth managers are becoming bigger and they have a more muscle, they also develop in-house asset management solutions or portfolios. So they don't need that much the asset management industry as before. At least this is something that we are seeing right now, right? And we can check that if you ask for a typical asset management firm. I mean, they will tell. I mean, they are having difficulty to raise money, and the fees are shrinking. I mean, in terms of even the management fees and the performance fees, a portion of that is becoming more and more with the distribution side. So that's a structural change we are seeing in the market right now.
Interesting. It's funny you mentioned the second wave, and I recently spoke with Rafael Poloni, who's the managing director at FK Partners that do all the CFA courses and the CFP courses in Brazil. And he said the same thing, like you mentioned, the second wave when XP and BTG were first signing up financial advisors. He said they would sign up anybody. He said we would have people that would close their restaurant and become a financial advisor. But he said the same thing, that there's now a third wave and it's much more professional and you're starting to get more qualified professionals into the industry.
Yeah, that's definitely we're betting on. I mean, we think that we are in the middle of that, or at least in the beginning of that, I'll say.
Yeah, it's still early for sure. So let's start talking a little bit about Brazilian markets in general. So just to level set, I'll ask you a very general question. What is your general take on the current state of Brazil's economy and financial markets?
Right. Again, this is a very complex, and we can talk about like a day about that. I mean, but I mean, the Brazilian economy is not doing bad. I mean, we are growing. I mean, the last years, a lot of the analysts have to raise their estimates for the GDP growth here in Brazil. So I think the economy is kind of fine, but we are that. I mean, the way we are going through is not necessarily encouraging, especially on the fiscal side. I mean, I think everybody that look at Brazil and have a knowledge of Brazil, they know that the fiscal side is possibly the main problem of Brazil right now. But at the same time, I mean, so the economy, we think it is in a good shape, but of course, the fiscal concerns are increasing, right? And the way this government right now is acting or communicating, they don't seem like a very concerned about that. Of course, they have their ideology. I mean, they really believe that more spending is can be considered investment. Okay, so let's invest in the social side and the social needs. I mean, Brazil, it's a country with a very strong social problems, but they recognize that they need to control the fiscal side, but they don't see very keen on that, right? They don't see very strong in convincing the market that they are there for sure. So I think that's the shape of the Brazilian economy right now. But when you talk about Brazilian markets, the way we are seeing here, it's definitely there is a lot of premium everywhere. I mean, in every asset classes, when you see the equity market, the fixed income market, the real. There are premiums everywhere, and the interesting thing is that okay, we have the premium looks cheap. Brazil looks cheap right now, and I think it is. But what especially I talk to clients is that we have to have a caution here because we came from a decade of negative real interest rates in the whole world. In the US, we had negative interest rates like 2 years ago. And right now, the things look changed. I mean, I don't know if you're returning to those kind of rates in the world. So that raised the bar here in Brazil. So, for example, I'll give you an example, like the inflation-linked bond here in Brazil, the sovereign one, the NTNB, right? They are yielding 6 plus, right? 6.2, 6.3 sometimes. And historically, this is a very exciting price. I mean, and usually people that invest in this kind of yield makes a lot of money. The problem is that okay, what is the length of the past we are considering, right? Because okay, in the last 10, 12 years that was true, but in the last 12 years, the real interest rates in the US was negative. So when the US tips, the 10-year tips was -1, our inflation linked bond here was yielding 4, right? So with 5% the difference between both. Right now, the US 10-year tips are yielding around 2, and here is 6. So the difference is 4. So historically, the difference is always between 4 and 5, and at least you have a very strong call that favor Brazil against US. I don't see this difference becoming shorter, at least in my view. So that's where I talk to clients. I mean, okay, it looks cheap, historically looks cheap, but you have to have a caution because the real interest rates in the whole world have changed. So of course, I mean, the carrying is good. Okay, you yielding like a 6 plus real rates. It's very interesting, and of course you have that in the equity market as well. So a lot of companies yielding inflation plus 10, 11, 12% if you evaluate that by the IRR. So I don't know if I answered your question, but the way we're seeing the market is that with a lot of premium, okay, elsewhere, especially here in Brazil, we're talking about. But I don't see this premium. I don't see any trigger right now to make this premium get shorter because of our local things. I mean, I don't see the government addressing the fiscal agenda. And because of especially because of the new level of rates worldwide.
So let me ask you, I have a question about Rio Grande do Sul, because you're from the region, you know it very well. Q2 economic data is going to start coming out pretty soon. And for international listeners that don't know what happened in Rio Grande do Sul, there was a giant flood, a human tragedy. It was terrible. I mean, the Porto Alegre airport was completely closed for over a month. And I see
No, no,
all type.
it's still closed.
It's still closed. Okay, so
Still,
that's
still,
so that's how bad it was.
yeah.
And I see all kinds of opinions ranging from this is going to have a huge impact on Q2 economic data in Brazil because how much economic damage was done. And then I see people that say it's not going to be that big of a deal, actually. So can you maybe just tell international listeners, what happened in Rio Grande do Sul? What do you think of the economic impacts? Any info would be much appreciated. I'd be interested.
No, like you said, it was an immense flow. We have seen in Brazil like those kind of flows impacting like cities, but never the whole state, the whole region as it was this time. Rio Grande do Sul is an important state in terms of GDP, right? So, I mean, I cannot talk about numbers because they are not clear yet, okay? The whole impact. But of course, I mean, you imagine that a lot of companies, they lost all their inventory. They have to stay closed for 36 days. We don't have the airport. A lot of roads were destroyed. So, of course, the economy has freeze over there for a long period of time. So, of course, this will impact the GDP and impact the capacity of the companies to pay taxes. So, this should impact the fiscal side of the government as well. And not just because the companies cannot pay a tax, but also because the federal government has to help the states to rebuild in terms of rebuild their infrastructure. So what we're expecting is a little pressure on the inflation side. Okay, Rio Grande do Sul is a product of some commodities. I mean, they are very important in rice, for example. So we're expecting a little pressure on inflation side, but mostly on the fiscal side, and that's not sold yet how they are going to approach. I mean, Rio Grande do Sul before of the tragedy, they were already they very high, and they have a high debt to negotiate with the federal government. So I don't know how they will come up with this debt negotiation. So we are seeing the impact more on the fiscal side and a little bit on the inflation side.
And it's still very much ongoing, right? You mentioned the airport's
Still
still
much,
closed, so
yeah, yeah. So that's why we don't have already a number to work with. And I think that the numbers that are coming up, I think they are very unclear. So I don't like to work with that. But it's another pressure on the fiscal side. Okay, we have many, so that's another one.
okay,
Unfortunately, yeah.
makes sense. Okay, so let me ask you a bit about equity markets in general then. So we talked a little before about, the major market cap companies in the US distorting flows. And in general, my understanding is there's been outflows from foreign investors leaving Brazil. So can you just talk about the importance of foreign inflows and outflows to Brazilian equity markets, and then what you're seeing currently with these inflows and outflows?
That's a very good question, Patrick, and nice and answer. Yes, I think they are really important to define how asset classes here in Brazil will behave, and that's an interesting topic for me. I think when you think the market cap and the size of the market cap that some U.S. companies have become, it's incredible. I mean, correct me if I'm wrong, but at least the last time I saw the market cap of the S&P was ranging around like $4 or $5 trillion. Okay, $45 trillion, I would say. Yeah. So imagine like a regular day in S&P, like a 1% increase in S&P, which is I think is in an ordinary day, right?
Yep.
You demand in terms of capital $450 billion to fund that, to fund that day, and this amount of money has to come from other asset class, right? I think the usual suspect is the treasury market and the U.S. cash market. But of course, you have also the emerging market, equity markets, and all those other markets. So, I mean, the size of this thing is getting bigger and bigger and bigger, and I think this is affecting the way the correlations historically that we saw. I will give you an example. I mean, historically, the Ibovespa here behave like the same way as the S&P. So if the S&P is increasing that day, the Ibovespa was doing well, and the opposite was the same. Right now, we are seeing a lot of days when the S&P is correcting and the Ibovespa is going up, and or the S&P is going up and the Ibovespa is correcting. So I believe that the amount of money necessary to fund the increasing market caps in the S&P is becoming a very interesting topic to talk about, because it's a lot of money. It's a lot of money. They have to come from somewhere. I mean, and this, in my view, is something that is affecting the US dollar strength right now. I mean, I'm not saying that just because of that, it is not, but definitely, I mean, the whole world is financing those Mag 7s increasing market cap, and for that they have to buy US dollars, right? So I think they are affecting the US dollar strengths. They are affecting the emerging markets, the emerging equity markets demand. They are affecting other asset class. At least that's something that I'm starting to pay attention about. And the treasury market is something that we need to consider as well, because, and I'm a little bit concerned about, because as you may know, I mean, the U.S. fiscal deficit is huge, and in some ways increasing. Yeah, in some
35 trillion this week, I think. So it's a crazy number.
So the U.S. Treasury market will also demand a lot of dollars to fund, combining with this huge S&P market caps increase. So I don't know how that will come up. I mean, so I'm a little bit concerned that for fun, this U.S. deficit, people, investors, especially because some traditional buyers, as you guys know, like some countries like China, and they are stopping buying treasuries like they did. So the demand for U.S. treasuries is decreasing. The amount of U.S. treasuries necessary, the supply of U.S. treasuries is increasing, and the amount of money to fund the U.S. equity market is increasing a lot. So that's a lot of money. That's something that I believe is distorting a little bit historical correlations, and yes, the valuation of some asset classes.
So what do you think needs to happen then for the flows to reverse? And maybe we start to see inflows again into emerging markets in Brazil. Does the Mag 7 trade need to unwind and capital need to leave the major companies, come out? Does Fed rates need to come down so the treasury market's less attractive? What has to happen for you to start to think money's going to start flowing back into Brazil?
I think you already got. I mean, those two things I think are the most important. Of course, I mean, lower U.S. interest rates will definitely help. Okay, but that will depend a little bit of the shape of the economy. I mean, but if you can maintain a good economy, a good condition, and you lower interest rates, I don't see this not helping. I mean, this should help the emerging markets for sure. We expect that, but we don't see the Fed lowering that much rates. Okay, that's a very difficult call. I mean, but I mean, the way the economy, the U.S. economy is right now, we don't, and the way the inflation is behaving, like some stickiness in some areas. I mean, we definitely see a room for Fed cuts, but we are not seeing the Fed rates returning to those levels for 2, 3 pre-COVID era, right? So that's something that should help to change the inflows. But I believe the most important to change these inflows would be some disappointment on the U.S. market, especially the U.S. equity market. Sorry, especially on the AI investment thesis, and I don't see this happen. I mean, that's not my base case,
Yeah.
But maybe I mean the way has been building right now. I mean in terms of capex from those Max 7s in AI. I mean maybe you should, if we have some kind of disappointment and a more strong correction. I mean you unveil a lot of money, right?
Yeah.
Because the opposite is also true in a 45 trillion market cap market. If you correct like 10%, you unveil like $4.5 trillion to be invested elsewhere. So that would help to change the course of the flows.
And then, so let's say hypothetically, then money does start flowing back into Brazilian equities. Are there any sectors or indices maybe that you would expect the flows to come into? Do you think the foreigners buy Petrobras? Do they buy the EWZ ETF in the US?
We see the whole Ibovespa cheap at the moment. Okay, we are not seeing like a specific sector. Of course, we think that the domestic sector has suffered the most because they are the ones that have the most impact in terms of derating, in terms of PE, in terms of multiple. So they are cheaper compared to historically compared to commodities and so. But at least it's because what is the call in Ivest? Because we have to look domestic as well, and then maybe later we can talk a little bit about the Brazilian real
Yeah.
and the fixed income in Brazil. But we believe that the dollar strength should continue. Okay, and we are not that optimistic with the real. So we definitely like a part of the equity portfolio in Brazil to be dollarized, and we find that, of course, in the commodity exporters and exporters in general. So we like to keep a part of the portfolio on the equity side more dollarized. So we still like the commodity exporters and the exporters in general. But we have to mix with the local companies, and we think they are cheap. I mean, in each sector, the retail sector, the healthcare sector, the real estate sector. So that will depend of the stock picking. We have our individual favors in each sector. So we like this combination. Of course, the financials as well, because interest rates should not be lowered in Brazil. I mean, should stay higher for longer in Brazil as well. So we like a lot, for example, insurance companies.
Interesting. Yeah. So you anticipated my next question. Before we get to the reais, I want to just touch on the other part of the outflow question, which you mentioned is Brazilian portfolios are dollarizing. And this is a trend I've seen for the past few years in the Brazilian investment industry, is people more and more talking about holding a portion of their portfolio in dollar denominated assets. So can you just talk about, maybe what percentage of an allocation to a family office portfolio might be in assets outside of the reais? And when did that really start? I mean, when did dollarization really become a thing in Brazilian portfolios?
Yeah, in the past, usually more than 95% of the Brazilian savings were denominated in reais. I mean, just the high net worth individuals, they had like offshore structures or they invested abroad. Okay, but that, like you said, like changed, and especially with this wealth management industry getting bigger and more democratized, right? So it become easier to open an international account. So you can open. It's very easy today. We have companies like Avenue and even the XP and BTG. They have international accounts. C6 and all those companies. So become much easier to invest abroad, and people are definitely doing that. And that's, I think, is the second. Like I mentioned to you, the first structural change in the market. I think that's the second. People are definitely investing more abroad, and we in Invest, we are increasing our international exposure for clients. Okay, because of a lot of things. I mean, we have to check. I mean, right now the we are more negative on the Brazilian reais. Okay, and I explained a little bit that why. And we have right now in US dollars a fixed income that is very attractive with yields we don't see every day. I mean, we can buy fixed income in US paying 6, 7, 8% yield. And even the equity market we like, okay? We still like the S&P as a core investment. Of course, we have to do some stock picking there, but as an asset class we like. So, and even the access to alternative investment classes, investment products abroad is getting bigger. So right now we can access hedge funds that we couldn't in the past, private equities and real estate. So a lot of alternatives that we didn't have in the past. So yes, I mean people were doing this and we are doing this. I would not say a specifically portion. I mean 30, 45, 50%, that will depend of the client. And that will depend of our financial planning with this client. But what I say is that it's increasing, right? And I think I answered your question, right?
Yeah. That's a huge change. So go from 95% BRL denominated to 50% is a huge change in allocation.
It is.
So we mentioned the real. It's been one of the worst performing currencies in the world in 2024. So do you think it has more to do with these longer term structural changes that Brazilians are now diversifying, selling their reais to buy international assets? Or does it have more to do with the current fiscal situation and the deterioration and investors are panicking about the current fiscal situation?
It's always important to be humble and say we don't and we admit that we don't know exactly, but our base case here is that is a combination of fundamentals and financial flow. Okay, so we talked a little bit about the financial flow. So the financial flow favor the US dollar against the real. Okay, because Brazil's don't seem very attractive in a world that we don't have nothing to offer in terms of investment thesis in a world that everybody is looking for AI and nearshoring. At least Brazil should have some potential in terms of nearshoring and green energy, but I don't know. I mean, we are not attracting this capital. So, and on the other side, the financial flow out to buy US dollars from locals is increasing, like we just mentioned, and we can add that to the increasing of the bets in Brazil, and all those bets companies in Brazil, they demand US dollars. Okay, they are an outflow. And the crypto, of course, is also another thing that is impacting the balance here in Brazil. So all this flow together, we don't see this reverting. I mean, I think this should continue because I think it's more structural. But we have the fundamental side of the story, and again, on fundamentals, we are not very optimistic with the real as well. Let me explain a little bit why. I think that maybe the $1 million question here in Brazil is how the new central bank will behave or how the new central bank will be. Okay. And why I'm saying that is basically because right now the current central bank, they have been a very orthodox central bank, and the market recognize that. So they are delivering a level of real interest rates which somehow they keep the real under control. Okay. The problem is that, of course, like I mentioned, the U.S. real interest rates, the world interest rates is getting increased. Of course, the real interest rates here in Brazil has to increase too. But the market right now is have been concerned how the new central bank will behave and how would be the new level of real interest rates they are going to deliver, right, in the Selic. For their mandate. I mean, all the you guys know. I mean, all the political pressure is for lower rates. I mean, the current government wants to see lower rates because they believe this should help the economy. And for the new central banker, I mean, there should be a lot of political pressure. So I believe that until we discover that, the market will have a base case that the new central bank will work with lower real interest rates. Okay, even not changing the Selic and the inflation in Brazil going up, or the same inflation but with lower rates. Okay. Either way, the market right now is considering that the rates, the real interest rates may be lower and or at least lower than the required one by the market. So in this kind of environment, you search for a defensive in the exchange. So you buy US dollar, right?
Yep.
So that's something we are considering here, but right now is our base case. Okay, we don't know how the new central bank will be, but we recognize that the political pressures will be immense. So we are afraid that we have to work with lower real interest rates in Brazil. So we see the real pressured by that. I don't know if I
Yeah, no, 100%. I've been surprised at how politicized the central bank policy has become. I mean, it feels like every week Lula comes out and says something mean about the central bank president because he won't lower interest rates, and it seems like it's become very politicized. So I'm curious then, because I'm not sure who the potential nominees are for the next central bank president, but is there any diversity amongst them, or is Lula just going to get to appoint someone that's going to cut rates the way he wants to?
We don't know that exactly. They don't open up too much names. The favorite one right now is Galípolo, which is current member, okay, which was nominated by Lula, and the market believes he will be the next one. I think at least he's the favorite one, and a portion of the market is afraid that is not being Galípolo, being someone more less orthodox and more political that we don't know. We don't know this name yet. So I'm not a specialist on central banks, okay,
Yeah.
in terms of to know all the names. But what can I say to you is that the favorite one is Galípolo, okay. He's in the market the market doesn't have a call about Galípolo. I mean, some people believe that he should continue the work done by Roberto Campos. And some people say, no, he's linked with Lula, so he'll be political, he'll not be orthodox. So we definitely don't know yet how Galípolo will be, but we don't know if it's going to be Galípolo, right? Maybe other guys. So that's something that we should pay a lot of attention during the second semester, how Lula will address this issue. Because I think this pressure they have, I mean, the people will be afraid that the next central bank will deliver lower real interest rates, like I said, and of course this puts some pressure in the real.
Yeah. So it sounds like regardless, it's neutral on the real at best, but
Yeah,
possibly
real,
bearish.
we have a good premium in real, like other Brazilian classes, but we prefer the other Brazilian classes because like I said, I mean, if the new central banker deliver lower real interest rates, that somehow favors the U.S. The equity markets, for example, like some companies, especially the leveraged ones, some portions of the fixed income market, especially the inflation linked bond side. And so I mean, the real has a premium. I mean, they are cheap. It's cheap. But the US, the equity market is cheap as well, and the fixed income is cheap as well. So all the Brazilian, the kit Brazil, right, is cheap right now. But we are seeing this problem in real. I mean, we have this technical portion, the flow, and we have this fundamental that concern us a little bit.
So you mentioned a few times that you like the inflation-linked treasuries, correct? Why do you prefer the inflation-linked treasuries as opposed to Selic or a fixed rate?
because this is the real interest rates, and like in US is the benchmark. So I believe that it's not that I prefer this asset class. Okay, maybe I
No, no, those are my words, but yeah, I
no,
know
no,
what you mean.
but I mean, I like to look more on the real interest rates because I mean that impacts more, I think, because in Brazil, Brazil is an emerging market, so we are always concerned about inflation and the inflation linked bond here in Brazil, it's a very important benchmark. I would say that it's not the CDI, but it's maybe the second most important benchmark that people look at, especially for long-term investments. And I believe that this Brazilian inflation linked bond is somehow and a lot correlated with the US real interest rate. That's why I mentioned the US TIPS.
Okay. And then what about further out the risk curve? Do you find attractive issuances among corporate bonds when you start looking at some major corporate issuances that are trading maybe, I don't know, CD plus three, CD plus four? Or do you prefer just to lock in the real rate with the inflation linked?
That's a question that opens up the possibility for me to explain a little bit the asset allocation, how we do.
Hmm.
And I try to summarize that because it's a little bit complex, but we like to segregate the client portfolio into basically three parts. We have the defensive side, which should pretend to protect their portfolio. We have the attacking, the offense side, and then we have the neutral, what we call the alpha, pure alpha alternative side. Okay, that should be discorrelated with the market. On the defensive side, of course, we have this all those products linked with the CDI, the floating rate. But if we enter in a period where the central bank delivers our lower real interest rates, the CDI will not protect you that much from inflation, for the purchasing power problem. So it's definitely something that we have a lot in our portfolios because the CDI we believe is an important defense. But we are lowering a little bit and favoring the international investments because. So the defensive side is the CDI, some short-term fixed income, and international investment. Even equities we consider defensive here. So an S&P portion of the portfolio we consider in the defensive side, and we are looking more defensive in terms of not in terms of volatility. Okay, we are not just considering volatility, but defensive in terms of long-term perspectives. Let's just say Brazil deteriorates a lot, and the Brazilian real goes to 10, 12. So you really protect your portfolio being invested abroad. Okay, so we consider that. The offensive, the attacking side, of course, local equities, more long duration fixed income, even a little bit of crypto we consider. And on the neutral side, we prefer. Well, then we have a lot of asset class. We have what we call FIDICs here in Brazil, which are structural products that we can buy the subordinated quotas, and you have judicial claims that we can purchase credit. We have, of course, the hedge funds. So the alternatives should be not correlated with the market. Okay, so here we try to find good managers and good products, and the allocation in these asset classes doesn't change that much. And we try to change a little bit more the tactical between the offense and defense between the asset class over here. But in short, to answer your question, right now we are favoring international investments, okay, in more the fixed income side than the equity side in the US. We are favoring a little bit of on the attacking side, we prefer the Ivest, okay? We prefer the equity markets because we believe that the earnings cycle is becoming positive. Okay, for the most, maybe this is a little bit biased with my past experience, but we are seeing the earning cycles here in Brazil for the companies in Brazil getting better. I mean, the last 2 to 3 years, we had a very strong downward earnings revisions. Okay, so the consensus for the Brazilian companies right now are much more conservative in terms of revenue growth, in terms of margins. So we believe it's easier to be surprised positively with earnings in Brazil. We are seeing like the cycle getting better, and the prices. I mean, the multiple you are paying is not demanding at all. I mean, it's cheaper comparing to historical. So, and again, in the equity market, you protect yourself with at least partially with the inflation, and you have some U.S. dollars denominated revenues in some companies like the commodity exporters. And so in the attacking side, we prefer a little bit Ibovespa and some inflation linked securities, like especially the ones linked with the infrastructure. Okay, we
Okay.
have we have this products, those funds that invest in infrastructural products, credit products that it's very interesting because and attracting because we don't pay, it's tax exempt for in terms of dividends, in terms of capital gains. We are just concerned a little bit with the credit spreads. Credit spreads in Brazil is getting tight. So to choose a private credit against the sovereign is not that trivial as it was in the past. So I don't know, but in short, that's the way we are invest the client's portfolio right now.
Okay. I want to be respectful of your time, but I have to ask you one more question because it's come up a few times when we talked about flows, and then you mentioned crypto also when you mentioned the aggressive side of your portfolio. And for me, one of the more interesting stories of financial markets in 2024 has been the Bitcoin ETF. I think BlackRock in 6 months has put $20 billion under management. We've seen U.S. pension funds, state pension funds start to allocate to Bitcoin. So has that become part of an allocation for your client's portfolio?
Yes, but a small portion, okay? Especially because crypto is something that we feel that that we definitely do not control the volatility, okay? We prefer to have a structural allocation on the crypto, but a small one because of the volatility, of course. And we have to, and we still have to see, and we still have to understand a lot of things like how they will behave in terms of value reserve, which I think that's the most interesting thing about crypto, like a digital gold or something like that. And in terms of transactional currency, right?
Yep.
I think there is a lot to be proved in terms of that. But anyway, we recognize the positives about the crypto. We understand the market, so we prefer to keep like a small portion of the client portfolio invested in a structural way. And you mentioned about the ETFs. That's something that should help, in our view, to control a little bit this volatility. I think the more broadly used and more broadly trade, the more liquidity we have. I think you should that should help to control a little bit the volatility, which in our view is the biggest problem of the asset class right now.
Yeah. So did the US ETFs change your opinion? Because Brazil had a Bitcoin ETF. Most people don't know that. Brazil had a Bitcoin ETF listed a few years before the United States. But was it the BlackRock and the Fidelity and the SEC approval that really started to get you interested, or were you already allocated before the ETFs?
No, it was a little bit before, okay.
Mm.
But we just feel that I think the U.S. market is much bigger than Brazil. So in terms of flow, definitely that. I mean, the Brazilian demand for crypto doesn't change the crypto story, and
Yeah.
change moves a little, just a little bit, but the U.S. Is a whole different story. So I believe this is much important. So no, we invested in crypto before, okay. And again, this is just a small portion of the portfolio. I mean, of course, there are some clients that are really a big fan of crypto, and they tell us we 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 incorporate that in the client portfolio, but we invest that before. But again, like those ETFs developments, I think that should help. I mean,
Yeah. Has it
I think
helped?
that's a positive development. Yeah.
Has it helped with the conversations with clients that didn't have any opinion on crypto before? I mean, have you found that clients have become more receptive
Crypto
now
is
or
like
no?
a religion. I think the people love it or hate it.
Yeah.
So I don't think that the ETF development changed the opinion of one client. Truly, I just think that they help the market develop and to lower a little bit the volatility. That's the way I see.
Interesting. Francisco, I could ask you another 100 questions and we could go for hours about Brazilian markets, but I want to be respectful of your time. So tell listeners before we end where they can find you on the internet, follow some of your work, and learn more about Ivest.
Well, thanks, Patrick, again for the conversation. It was a pleasure, and like you said, I mean, we could spend like hours here talking about the Brazilian market. There is a lot of things to speak of. Sorry for the listeners about my English. Sometimes
No, 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 no.
I'm not.
You spoke, no, no, you spoke
I
very
have been
clearly.
working just locally a long time, so I'm not that used to the English anymore. So apologize for any mistakes. And well, the listeners can find me. I'm not a big social media, so I don't have a Twitter or something, but people can find me on the LinkedIn, and if you want to know more about the Evest, we have just go to our website and stay linked with our communication there. I mean, we have the our monthly report where we put together our market views in general, okay, and how the allocations are broadly structured. So I think if listeners found that interesting, that's a good place to be.
And I
Thanks.
will link that in the show notes for anyone that wants to find it easily. Thanks so much, Francisco.
Thanks, Patrick.